Chair, participants, Your Excellency, dear colleagues. I'd just like to start by first refreshing the concept of digital financial inclusion, and I'd like to start with a Sufi couplet. Panj rukan Islam de te chhewa Frida tuk. It's in Punjabi, so I'll try to translate it as well. Panj rukan Islam de te chhewa Frida tuk. Je na mile chhewa te panje jate muk. So that's 5 pillars of Islam, but 6th one is food, poverty, self-respect. That's how I take it. And if you don't have self-respect, then everything else disappears. So the inclusion component is about valuing an individual, viewing him as a potential, and providing him with an opportunity in which we remove the barriers and the discrimination and provide him or her with an opportunity to excel and contribute the most. It includes gender inclusion. We have to take off the lens of bias, color, discrimination, creed, religion, disabilities. It's a very vast word inclusion. Financial, it's obvious, it's the banks, but what are banks? Banks are basically 2 things. We are transaction facilitators as banks. I represent FINCA, so I'm taking we as a bank. We are transaction facilitators, and as transaction facilitators, we get value. There's a stored value in our system, in the ecosystem that we have created out of the transactions. And the stored value can put both debit as well as credit. So the financial inclusion part is not only about having an account, but it's also about having borrowings, both the things. These are 2 important needs, transactional needs and the need to borrow. And the third thing is the digital part, and how and why the digital and where it's taking us. Digital is changing behaviors. I'll just share one thing to explain what I mean. I grew up, I'm a digital immigrant. So digital immigrant is a term I heard a few days back, and I'm just using it. I was born in an age when, it was an analog world. And you have the newer guys who they are born into this age. So I'm naturalizing myself. The camera that I had, it was Kodak. So there was a limitation of 24 films or 36 films. So I had to go somewhere, buy a reel. And then after taking the snaps, I would go back, develop them. I had to buy an album and put some of my memories into it. And after taking the pictures, after exhausting those 36 snaps or the reel, I will realize that what was the quality of my photography. So maybe I've lost a memory because something moved. In the digital world, we have cameras. When is the last time we went to buy a reel? Or there was a need to develop a picture, or for that matter, put it into an album. It's all being done digitally by apps. Even sharing is through apps. That's your new medium of showing your picture and showcasing where you went. This is digital world. This is how.
And Kodak disappeared.
Kodak disappeared. Absolutely. Thank you for pointing that out. And Kodak disappeared. But this has changed the behavior. And this behavior change is going on with this mobile thing coming in, these smartphones coming in. If you look at the Facebooks and the Twitters and the social media, it exploded post-launch of smartphones. And they have created a lot of value in this space. Going ahead with our thing. So potential, the digital financial inclusion part, I'll take it forward from here. So in the context and the landscape, what we have at the moment is the conventional banks. I mean, when I started my banking, brick and mortar was one, that's physical branch. Going to the bank meant I have to go, and still that's the case. I mean, account opening is not very convenient. It takes, it used to take hours initially, now it takes days actually, as a matter of fact. We've gone from worse. And then there is a human element involved of a bank staff, and the instrument of transaction used to be check. It has improved, it's ATM, but we'll see how it goes forward. But these are the limiting factors. And despite the central bank push, they've been pushing the banks to do more and add more, expand more, go to the unbanked areas and the underbanked areas. This slide, this slide gives you the story that what the 70 year of effort has taken the country to. We have about 16% of the people there banked, and we have close to 27 million cards and 1.5 million debit cards. And when you compare it to, let's say, a country, it's an example I'd like to cite China over here. In the past 30-40 years, they also developed their financial inclusion and poverty alleviation and growth plans. And this is what an inclusive growth does to you. They've lifted tens of millions of people out of poverty. But I just want to share two figures that I came across, and they were mind-boggling to me. It's a 1.3 billion country. They have 6 billion cards. Just imagine. I mean, we are to 200 to 20 million, and we have 27 million cards. It's a percentage. They have a multiplier. It's close to 5. 5.5 billion is the number of the debit cards, and only half a billion is their credit cards. This is the number. This is what an inclusive strategy does to you, and this is the scope. And then there is another sad picture. We have only 5% of our population that has access to bank credit. Not that they don't need money. There is a need for money. 50% of the Pakistanis, they borrowed money, but they borrowed through informal sources. And only 5% or slightly more came to the banks, and this includes microfinance commercial banks. So this is where the second opportunity is for us. That the individuals do have borrowing needs, but do we have products? Are we using the right channels? And what to do? Sorry. Also, can you operate it from there instead? Yes, here comes 3G, 4G. So if you just see, it's India, Pakistan, Bangladesh. In Pakistan, the 3G option and 4G option was held later, but we have caught up. It's about, at the moment, 20% of the population, they have active 3G, 4G, and when you put it into numbers, it's about over 40 million people have 3G, 4G enabled handsets. They're all smartphones, by the way. So we have seen so far that the unbanked is 75%. Uncredited is people who don't have access to credit. It's a large number, 95%. And with the technology coming in, the sort of opportunities are there. Now, can you do it? Yeah. So the branchless banking was a step forward in this thing. And as was mentioned earlier in the day, and even pointed out by Mr. Summer, that you look at two things over here, that the M-wallet transactions and OTC transactions are equal now. They're almost 50-50. And M-wallets are 27, this figure has been quoted, and the use, unfortunately, is confined mainly to mobile top-ups. So while we are on this road, on this journey, the usage is confined, the user experience is restricted. And this gives us another opportunity. 90% of e-commerce is cash on delivery. So while we have unbanked individuals, we are not lending enough to them, our payment solutions are not covering this thing. So remember I spoke about banks being transaction facilitators, and the result of that, the value gets stored into the system. It can be deposit value or a lending value. So we are keeping this money out of this value chain, value system. And if we bring them on, it's a great opportunity, both for them and both for us. The opportunity that you see is 60% young people, they're born into digital age, their behavior is different. They want different things. For them, I mean, for me, I use iOS, Siri. I have not been able to figure out what to do with Siri, but with them, they know what to do. I mean, I won't like to call them lazy, but that's what the technology is making us. Yeah, I had to go to library to research something. Now you need to go to Google. So these are behavior-changing things for all these individuals and guys. And with the smartphones, and you heard the figure of 2020 that we expect this smartphone population will be 80 million, and 3G, 4G. This is the 3G, 4G enabled handsets basically. So there's a great opportunity, but how can we leverage it? In order to leverage, this is we call it a perfect storm, and we do have a lot of enablers. And when we say the picture is not complete yet, there's a lot happening in various other things. We have telcos, and one great thing about PTA is that we are, I think, the only country which has 100% biometrically verified SIMs. And then we have branchless banking networks, and close to 180, 200,000 active agents are over there, and this is also evolving in itself. And then we have banks. Banks have the traditional account holders and the credit cards and the POS merchants. The POS merchants, POS is an expensive machine. The new way that's coming up is a QR code mechanism, and it's hardly you need a smartphone of a few thousand rupees, and or just a printed code to undertake the transactions. This is also part of the inclusion strategy that some of the countries have successfully adopted. Nadra is offering its APIs. You can integrate them directly, open the accounts frictionless, without any frictions. And State Bank is, as a responsible regulator, they are providing us with opportunities to expand into this universe and explore these opportunities. I'd like to just share what FINCA has done in this area. How are we trying to capture this opportunity? I'd just like to share. We launched this initiative in July, and we have crossed 100,000 wallets in 5 months' time. It's the only mobile wallet in the country which is SIM agnostic, so you can, no matter which network you use, you can open an account. It's frictionless onboarding. It takes 1 minute to open a SIM account with us. You don't need to have an account with FINCA for that matter. It's integrated to the financial plumbing that you saw on the previous slide, and with Nadra, so everything gets integrated, and you can open an account in a minute. And the way we have developed this, we're trying to develop this ecosystem is like the way these Facebooks and WhatsApp and Skypes have done. They're free. And whenever you have something free, the concept is that it has unlimited potential. You have Facebook, it does not create any content, but it's the largest owner of the content in the world. So our objective is that to have more transactions coming in, flowing through our system, so the value in store will increase as we move along. And this is how we want our bank to look like going forward. So one part is frictionless onboarding. The other part is that it's interoperable. You can transact with any bank, with any payment solution that is out there in the market. And it also interacts with various payment options that are there. You can do analog payment as well as a digital payment is over there. We're trying to integrate it with the virtual cards and have our own virtual card, as a matter of fact, for the e-commerce facilitation. The opportunity we saw earlier, that 90% of e-commerce in Pakistan is cash on delivery at the moment. And we're also trying to build payroll solutions. We have done that. And our payroll solution takes into account the financial inclusion bit. That is, even if you're a part-time worker, you are a wage earner, the company can compensate you digitally. They can give you credit into the bank account. Normally, these payroll solutions are meant for permanent employees or contractual employees. And we are layering it with insurance products and with the saving products. This is where another thing comes in, which is that we have been discussing over here, how to lend. As banks, we have access to very significant data, but we are not analyzing them. Our customers pay utility bills to us. They go and spend money. They use their cards. We know where do they eat, where do they shop? Where do they like to spend their money? That is one side. But we also have this information about the merchant now. We know what his cash flows are. The opportunity in this area lies around developing credit scoring models and algorithms and program lending opportunities. We saw there are 50,000 POS machine merchants. POS machine is installed only after the customer fulfills certain criteria. As a banks, we have this cash inflow, but we're not using it to build products around that. We have banks that are into transaction bankings. When you go and talk to the big banks like HPL and UPL, and they have transactions flowing into their system through platforms, digitally captured. It's in trillions of rupees. The merchants paying and the merchants buying things from their corporate customers at the center. This all information is available in the system. But how do we evaluate it? How do we analyze it? How do we build our programs around it? We are sitting on mines of data. We just have to use the right and develop the right tools to that. As an economy, what we have heap of deposit on one side, and that heap unfortunately has not led us to economic activity. It has led to heap of liquidity on the other side. The banking sector ADRs are going down, advances to deposit ratios. The banks are not lending money at all. So this is not such a good situation from a macroeconomic point of view. But this basically means that as banks, we need to develop some risk-taking abilities. We need to go back to the drawing boards and figure out how can we come up with more creative digital products or easier products, simplified products to reach out. But at the same time, where we also know what the cash flows are. It's all over there. Thank you very much.